Bitcoin is currently sitting at a very important decision point on the 4-hour chart, and what makes this structure especially interesting is the sequence of momentum shifts we've seen develop between the recent high near $82,438 and the local low around $76,061. This has not been a random move lower. This has been a very structured transition from bullish continuation into confirmed short-term bearish control. And when we break the chart down candle by candle, we can actually see the shift in market psychology unfold in real time. The first important moment came at point number 1. Here, Bitcoin pushed aggressively higher and broke above the previous swing high, producing a strong bullish expansion candle which eventually peaked around $82,438, just beneath the 82,500 region. At that moment, buyers still clearly had momentum control. The market was producing higher highs, continuation behavior remained intact, and structurally this still looked like a healthy bullish expansion leg. However, what immediately followed becomes very important. At point number 2, sellers aggressively rejected that breakout attempt. In fact, the market reversed nearly the entire range of the prior bullish candle, closing back down through roughly 95% of candle 1's expansion range. From a price action perspective, that type of reaction matters a lot. When buyers produce a strong breakout candle but cannot maintain acceptance near the highs, it often becomes an early warning sign that momentum is weakening beneath the surface, and that is exactly what Bitcoin started showing here. Buyers did make another attempt higher at point number 3, but this second rally already looked weaker structurally. Price failed to reclaim the same high region, producing what effectively became a lower high beneath the prior peak. And once sellers began pushing below the prior swing lows, the structure shifted completely. We then transitioned from higher highs and higher lows into lower highs and lower lows, and that is the moment where the short-term trend officially changed. We also saw liquidity sweep behavior developing underneath the structure as sellers continued forcing price lower, and at this stage, the path of least resistance was clearly beginning to shift toward the downside. Buyers attempted another recovery rally, but the bounce itself lacked conviction. The market failed to produce meaningful reclaim structure, and sellers quickly reasserted control with a strong bearish expansion candle lower. This also produced a red triangle sell signal, confirming that downside momentum conditions were continuing to strengthen. Notice something important here. The bearish candles were beginning to expand aggressively, while bullish candles became increasingly small and corrective in nature, a classic momentum imbalance. Strong markets tend to produce impulsive candles in the direction of trend and weaker corrective candles against it, and Bitcoin was beginning to display exactly that type of bearish continuation behavior. Point number 5 briefly interrupted that bearish sequence. Around the $78,750 region, buyers stepped in aggressively and defended support with a very strong bullish reaction candle. Price then broke a prior swing high and briefly reclaimed structure up toward $81,949, producing a blue triangle buy alert in the process. For a short period, it looked as though Bitcoin might attempt a larger recovery. But what happened afterwards is very important. At point number 6, sellers immediately regained control. A very strong bearish expansion candle appeared, and from the $81,949 swing high, Bitcoin proceeded to produce roughly 10 consecutive bearish closes lower. That is significant. Persistent downside closes tell us something important about order flow behavior. We were seeing very few strong bullish response candles and only small corrective rallies developing during the decline. In other words, buyers were no longer showing the same urgency they had earlier in the structure. And when markets stop producing aggressive bullish responses during pullbacks, continuation probability for sellers generally increases. Structurally, the market was now firmly in bearish expansion mode. Moving into point number 7, Bitcoin began stabilizing temporarily around the $78,400 region. This area effectively developed into a Fibonacci resistance zone where price repeatedly attempted to rally, but continually failed to gain acceptance beneath resistance. Eventually, sellers won that battle. Another strong bearish candle emerged directly from that resistance region, driving Bitcoin sharply lower toward the $76,000 area. Now, importantly, we also saw another liquidity sweep lower developing into that move. Price briefly traded beneath support, but buyers did begin responding aggressively around the lows. That brings us to point number 8, where the market currently sits. The candle at point 8 is particularly important because it has effectively become the dominant candle within the current range structure. Most subsequent candles are now trading within that candle's range, creating a compression structure between buyers defending support and sellers defending resistance. At the moment, Bitcoin is finding Fibonacci support between $76,325 and $76,333, with the current local low sitting near $76,061, the region buyers are currently attempting to defend. However, overhead resistance remains equally important. Sellers continue defending the Fibonacci resistance zone between roughly $78,311 and $78,390, preventing Bitcoin from reclaiming higher structure for now, and this creates the current battlefield. As long as Bitcoin continues trading beneath both the 89 EMA and the 200 SMA, the broader short-term structure remains weak. Now, the market is effectively waiting for resolution. If buyers can successfully reclaim structure above the Fibonacci resistance zone near $78,400, we could begin seeing the early stages of a larger recovery attempt developing. However, if support around $76,000 fails decisively, the probability of another bearish expansion leg increases considerably. Bitcoin remains trapped between protected support underneath and defended resistance overhead. Whichever side breaks first will likely determine the next major short-term directional move for the market. We hope this video has helped you. Before you go, join our free daily crypto trading newsletter. It's just a 5-minute read and it will keep you ahead of what's moving in the market. The link is above and in the description. If you found this analysis useful, subscribe to Crypto Trading Mastery and hit the notification bell so you don't miss our next daily video. Thanks for watching, and we'll see you in the next one.